Hey everyone, and welcome back. This is my first video of 2023. I know it's been a while and I always say that. However, I appreciate your patience if you're still around. As I mentioned in my last video, I just don't like making, videos over and over again about the same thing because my overall trajectory on the markets has not changed. We are still in a downward trend, and as a result, I remain a bear. But, talking about these things are pretty depressing. I mean, I consider myself an optimist, and I just, when I make those videos, it makes me even sad, and I just don't like feeling that way. And I know that there's enough to be depressed about these days as it is. So, I've already pretty much expressed my views frequently in previous videos from last year and the year before that. So, if you're curious, you can go check those out. But again, nothing has really changed in terms of the trajectory. But when it does, I will let you know, I promise. But even though that hasn't changed, there has been a shift as to what we need to be paying attention to, at least in my view, going forward in the months to come here. Before, we used to focus on, well, at least I used to focus on rate hikes and then the balance sheet reduction. The balance sheet reduction is still important, don't get me wrong, so still pay attention to that, but the rate hikes and the data, right? Because we would always look at inflation data and jobs data, other data as well, to determine whether we're gonna hike rates and by how much. But I believe now the focus is starting to shift over from that to what is going to blow up next and how is that going to affect the markets. Let me explain. So this week, a lot happened. If you don't know Silvergate, they were heavily associated with FTX and the crypto space, and we all know what happened there. Also, a lot of crypto banks went under, like Voyager and Silvergate. They were hurting after that one for sure, as you can see in the share price. I mean, they never really recovered. They just kept going down and down and down. But then recently, and we kind of see that here, they delayed their financial reporting, which is never a good sign. That usually means that a company might be going under or they're facing very, very bad internal issues. And they basically hinted at the fact that they're probably going to close down shop, and that is exactly what they did 2 days ago. So after markets closed in the after-hour session, they said that they're shutting down operations and liquidating. But what happened next is curious. So right as that was announced, and obviously the stock tanked after hours, you had other banks. But these aren't like crypto banks. These are regional banks that started also tanking in the after-hour session. So that really raised some eyebrows because people were, starting to wonder, well, what the heck is going on? Is this like contagion? Contagion, that's a very sensitive topic on Wall Street, especially with how much leverage we have and how high interest rates are nowadays. But anyways, I will talk about those banks in just a second here. But after that happened, then yesterday, early morning at 12:20 a.m. Central Standard Time, because that's where I'm at, Credit Suisse comes out and they basically also delay their annual reporting, financial reports, just like Silvergate. And again, people are thinking about Silvergate, and then now Credit Suisse is saying this. But the difference is that Credit Suisse, even if you're not in the financial sector, I would assume you've heard of Credit Suisse. But even if you haven't, they are one of the largest financial institutions in the world, and they're a Swiss bank. So there's that. But the fact that they're also delaying financial reporting is never a good sign. And, important to note that their stock price is also at all-time lows. So there's a lot of fears right now that Credit Suisse might also go under. Now, whether that's going to happen, I'm not sure, because, they are a very large financial institution. So a lot of people will consider them too big to fail. But then again, I mean, what we're about to see right now, I don't know anymore. It's hard to say. So what do I mean? Well, one of the regional banks that were tanking after hours with Silvergate was Silicon Valley Bank. And let me just show you this chart, guys. Wow. I mean, it still blows me away to look at this. So this was the day that Silvergate announced that they're closing shop and liquidating. So that happened after hours, so you don't really see any noticeable action here. But the next day, that's where it gets crazy. So yesterday, it was already falling in the after hour session, but once the markets opened up, this thing was just tanking. It just fell and fell and fell. And then, midday, you had the CEO come out and he basically was trying to calm the investors down. That never works out, especially with what he said. He was basically saying that, hey, if you tell other investors and panic them, they're going to panic and then everyone's going to panic and then it's not good for us. I mean, that's basically what he said. And obviously that didn't help him or the company's position. And they tried to raise capital too during the session. During the day, it just did not work. And they eventually ended up closing down 60% on the day. It also didn't help that people like Peter Thiel and other investors out there were basically telling investors to take your money out during the session. So that did not help at all. And then after hours, the stock was down another like 22%. It was absolutely remarkable what we were seeing, because you literally wiped off over half the valuation of the company in less than 24 hours. But then you started getting more panic and people were they were trying to take their money out en masse. I mean, essentially it was a bank run. I mean, we haven't seen a bank run in a while, but that's essentially what it was. And then this morning, you'll notice that this is the last candlestick that was yesterday. There's no candlestick for today. And the reason for that is because it never traded again. I mean, after the pre-market session, it was around like $40, I believe. It never opened with the market. It was just halted. And the FDIC comes out with this and they say, yeah, we're closing the bank. And that was that. And again, the FDIC came out because it's an FDIC insured bank. But my God, I mean, this is the second largest bank failure in the history of the US and the largest one since 2008. This is crazy. And I mean, again, the stock was trading at like 270 the day before, yesterday. And it's just all gone. Like, if you're a shareholder, you're completely wiped out. This was the 15th, 16th largest bank in the country. So it's not small. We're not talking about some bank out there in some small town in the country. I mean, this was a huge bank. Countless startups and well-established companies have put money in there. Like, a lot of venture capital in there too. And it's just, most of it's gone. But then people say, well, it's FDIC insured, right? I mean, they'll just get it back. They'll be made whole. Well, yeah, up to what the FDIC insures, which is up to $250,000. But knowing most of these clients, they have way more than that. Like, we're talking on a scale of millions, billions of dollars. And some of these companies are household names like Roku, which, I mean, they had like 26% of their funds in this bank. And I mean, they're not the only ones. You have Sunrun, you have Roblox. I mean, there's so many. I mean, this is such a serious situation that some investors are saying that this is like an extinction level event for startups, because if they lose their funding, I mean, they're just gone. They're wiped out. They can't make payroll. They can't function as a company. So it's a very serious situation. And we're estimating that approximately 97% of all deposits are gone. That's money that's just it just vanished. That will be erased from companies' balance sheets, and some of them are reporting earnings in a couple months. Even if you're not an investor, imagine if you're a worker at one of these companies that had ties with this bank. You might not be getting paid in a couple weeks unless another company buys out the bank or the government bails them out. But yeah, it's unfortunate. And even if you're not a worker directly related to the bank, these banks do a lot of business with each other, and I can't imagine that you're not going to be seeing some other banks go under as well. In fact, today, this morning, even the day before, you had a lot of banks like drop a lot, including my brokerage, Charles Schwab. I was surprised, but yesterday and today, they are down. Like, they lost a quarter of their entire market value, which is concerning because again, I trade with Charles Schwab, but that's even more surprising because they're one of the bigger banks out there. So if this is affecting even Charles Schwab and the likes of JP Morgan Chase, I mean, Lord knows how much worse this is going to get before things get better. The ramifications for the market are tremendous. Anyways, a lot of people curious, obviously, what exactly caused the bank to go under. And it's a pretty straightforward explanation. So if we take a look here at the list of their securities, you'll see that they had a ton of treasuries. They had a lot of MBS. MBS is short for mortgage-backed securities. If you saw The Big Short movie, you know exactly what we're talking about here. And also CMBS, that's just the commercial version of mortgage-backed securities. So they had a lot of fixed income. Problem was they bought the majority of it when interest rates were low, basically zero. And they just thought it would never end, or if rates were raised, they wouldn't be raised that much, I guess. That was their thinking. Anyways, because they bought these securities at such low interest rates, when the interest rate picked up, as it did, and as we can see now, the value of those securities plummeted. And especially in the real estate sector, we're starting to see defaults on both commercial and residential real estate. If you haven't been catching up with the news, that has been hitting the headlines for a couple months now, and that is severely affecting the value of these securities for sure. Now, just to give you a visual of what I'm talking about here, this is the 20+ year Treasury Bond ETF, otherwise known as TLT. I've talked about it on the channel. I've been bearish on it since around here. This is showing us the value back in 2020, 2021. You can see how far it's fallen since then because the yields have gone up, because the interest rates have gone up. So who wants to buy fixed income at lower yields when you know they're going to go higher, right? So the prices have come down. The problem is that they were holding a lot of these fixed income securities, and the value also went down a lot, as we can see here. This is just an example, but that is exactly what happened. They became insolvent, essentially. They also tried to raise money to cover their deposits, but it just wasn't enough. They lost confidence among investors, and everyone just bailed. But you have to be asking yourself then, okay, if they did this, how many other banks also did the same thing and are experiencing the same issues? I would imagine a lot. Even the big players. But the weakest players are getting killed off first, but you're definitely going to be seeing other victims from this, and it's not going to be good for the markets. Also, just to give you a visualization of how fast rates have moved up. I mean, again, we've never raised this much, this fast in the history of this country with the debt that we have. I mean, it's absolutely insane. Like, look at that. We are basically at 2000. We are at Great Recession levels in terms of the yields. That's the 10-year treasury. The 2-year is even more fantastic. It's like it's even steeper than the 10-year, and this is also at Great Recession levels. So obviously not a good sign. And again, SIVB, that was just one piece of the puzzle. This is the regional banking ETF. This includes all of the major regional banks. It used to include Silicon Valley Bank, but now they're most likely going to be removed. So not only were they negatively affected, you're seeing all these other regional banks selling off here. This is the weekly candle, and you can see that we dropped a lot. In fact, we are now at levels that we haven't seen since the lockdowns back in 2020, and you all know what happened then. And the reason why this is so important is because you'll see that the KRE, it's the black line, and the S&P 500 is this blue line. This is the classic canary in the coal mine in terms of where the markets are heading. And as of this moment, it is heading down steeply. And you can see that this divergence has increased quite a bit, so the markets have a lot of catching up to do. There are a couple other charts I want to go over, and also some more analysis specifically with the markets, but I'll cover that in the next video that I'll be releasing this weekend also. But until then, if you guys have any questions or comments, feel free to reach out. Please like, share, and subscribe, and I will see you all in the next one.